Welcome to Investago TV's weekly review, your essential source for global economic updates, keeping you informed on the latest market trends and financial insights every single week. Buckle up. Oil prices experienced a rebound on Monday, with Brent crude rising by 1.2% to almost $86 a barrel, and WTI increasing 1.3% to $81.6 after a significant 6% drop the previous week. This surge was driven by Saudi Arabia and Russia's recommitment to maintaining substantial voluntary production cuts. Saudi Arabia is set to uphold its 1 million BPD voluntary reduction, aiming to stabilize its output at 9 million BPD, while Russia will continue its 300,000 BPD cut in exports until year-end. Despite this, potential overproduction in early next year may extend these cuts. Nonetheless, these gains are tempered by reduced activity in Chinese refineries due to low margins and limited export quotas, countering the positive sentiment from the supply cuts. The price of money, a cornerstone of the global economy, is on the rise after 3 decades of decline. This shift away from falling interest rate marks a pivotal change, highly affected and influenced by supply and demand dynamics. The natural rate of interest is a critical concept that balances savings against investments, ensuring economic stability. Recent trends like sluggish GDP growth, demographic shifts and technological advancements has pressed this rate down. Now, a reversal is underway due to reduced savings from aging population, decreased Chinese investments in US bonds and growing US debt. Economists predict a gradual increase in the natural rate, which could mean higher long-term borrowing costs. This change will reverberate through the US economy, potentially slowing the rise in housing prices and affecting stock market growth. The US Treasury may face increased debt servicing costs, while savers could benefit from higher returns. The Federal Reserve may also regain some tools for managing recessions. Real estate stocks surged as the second-best performer in the S&P 500 following the Fed's decision to maintain interest rates, suggesting a potential pause in rate hikes. This news propelled investor confidence, especially towards defensive sectors like homebuilders and rates, which saw gains of 4.9%. This optimism is fueled by a combination of tight housing inventory, high mortgage rates deterring sales of existing homes, and analysts' favorable ratings for homebuilders. While rates benefit from the prospect of stable or lower rates aiding property values and transactions, not all firms saw gains, with Zillow Group's shares dropping after the earnings report. Mexico's economy outperformed expectations in Q3, growing 0.9% sequentially and 3.3% year-over-year, slightly higher than predicted. A strong labor market and hefty remittances fueled domestic consumptions, contributing to growth across agriculture, manufacturing and service sectors. The nation's post-pandemic recovery is bolstered by trade with the US and increased government spending on infrastructure, despite fiscal pressures and high interest rates. However, the devastation of Hurricane Otis and its ensuing costs, estimated at $15 billion, may pose challenges, although its impact on overall growth is expected to be limited. And that's a wrap for today. I'll catch you next week. Don't forget to follow us on our social media channels to stay updated. Wishing you continued success on your journey.